my name is Siddhant Parigi,
And I'm Pranav,
and this is our Toll Brothers stock pitch. Now, for a brief company overview, founded in 1967 by brothers Robert and Bruce Toll, Toll Brothers soon found themselves called the #1 luxury home builder in America due to their increased emphasis on customizability over the cookie-cutter design.
Our investment thesis is a strong buy over the long term, underlined by high and consistent EPS growth through high selling prices, $900,000 and above per home, on undervalued DCF in both optimistic and pessimistic forecasts, consistently high capital return with 52% of shares being retired since 2016, and TLS traded below average P rate versus its peers. Brief industry analysis shows that the luxury home building sector is growing and has experienced growth in the last year. Personalized residencies and upscale communities are becoming closer to the norm. High but easing interest rates are positively correlated with higher customer base. High competition and pricing allow for stable pricing. Durable materials are becoming more popular. House prices have seen growth and are beating inflation, and industry revenue is set to push up at around $169.8 billion over the 5 years through 2025, through 2026.
Continuing on, the apartments dominate the overall industry due to the multifamily appeal, followed by office/retail spaces and data centers and industrial spaces. Due to this, higher interest rates and tighter financing cause moderation on transaction rates. But you may be asking, how does this affect Toll Brothers? Well, it's actually a positive because it allows us to have premium positioning, disciplined capital allocation, resilient demand, and overall lets us outperform our peers in the same market. For competitive positioning, we have a brand-driven pricing strategy as well as structurally higher gross margins than our peers through our custom requests, which limits our discounting from our consumers. And high-quality land development protects and returns across cycles, and overall these advantages translate to more predictable earnings, lower cancellation risk, and better margin durability.
In our Porter's 5 forces diagram, we assessed the bargaining power of the customers to have influence because Toll Brothers operates in a market where buyers set the price. High value customers are price sensitive and have high demand, high education rates, so they're more sensitive to price fluctuations. Rising mortgage rates and cycling in the economy may also increase a buyer's power through the years. Intensity of competitive rivalry from our competitors is very, very high, and this is one weakness to our stock. And supplier bargaining powers, our bargaining powers is significant. Toll Brothers scale allows for negotiations, but disruptions in materials, so steel and lumber from overseas especially, can have some effect on this. But specialized luxury goods can give us suppliers the edge when it's coming to the marketplace. Our threat of substitutes is moderate because there are other competitors. However, our luxury customization, reputation, and diversity of product allows us to reduce this threat and really hit home to our buyers.
Continuing on, our barriers to entry are actually extremely low with a rating of 5 out of 5, which means a low to no threat. And that basically means that new entrants, such as smaller companies that want to enter our market, would have an extremely hard time finding their place due to things like regulatory appeals, capital requirements, and a need for local knowledge that can only be built up through years of experience. Now, like any other company, Toll does have its investment risks, such as sensitivity to the housing market and fluctuations in that market. Things like higher interest rates can slow demand, and recent backlog declines could impact our future revenue. However, construction costs and labor costs can pressure our margins. However, our stable leadership can get us through these challenges.
Speaking of leadership, management, and governance, our CEO, Douglas Yearly, has been CEO of Toll Brothers since 2010, and he has driven major growth by expanding markets, diversifying products, including customization. This has included him in Barron's top 5 CEO, which is a reputable agency. Record home sales in 2025, record home sales in 2024 and 2023 signify high growth and potential growth well into the 2030s. And 91% of our ownership is from institutional shares such as Vanguard, BlackRock, and Greenhaven. Our revenue drivers are many. Which first of all, our average selling price, which is high and it's growing, and it's also beating inflation, the inflation rate. Expansion into the Sunbelt states, Texas, Arizona, the Carolinas, Florida, has also helped us gain a new customer base. Disciplined land strategy improves our ROIC and our free cash flow statement. Share buybacks, dividends also improve our loyalty to our stock customers, and affluent buyers are less sensitive to interest rates. Lower cancellations, steadier backlog, etc. Prove our strength in this category.
Now onto valuation and financial analysis across stock price, competition, and PE ratio. For stock price, we're sitting around $153, with highest analysis prices being around $181, signifying a 17% increase. Competition around the 8.1 to 8.8 times is lower than DR Horton's and similar with Lennar. And overall, our PE ratio around 10 to 11 times is cheaper than most of our competition. And our upside potential comes from a combination of valuation, which due to trades below its intrinsic value and continues earning us growth and share buybacks. Overall, our discounted cash flow model shows a strong buy due to our demonstrated upside potential of 10.4%, as reflected by the numbers.
Also, this is at a low discount rate, which is like a pretty pessimistic discount rate. So this is not even the full potential of this stock to grow. And for ESG considerations, we include energy efficient luxury home building in our design also. Environmentally efficient homes, 30% less energy and effective building. Homes require less energy now, and low VOC products, paints, carpets, and recycling of demolished materials also helps this. Our focus on connectivity allows for bikers, indoor mobility, and adherence to health and environmental regulations. This is especially important in where we choose to build neighborhoods or even single custom homes. In our governance, we utilize SASB standards and local government standards, actively manages risk from environmental regulations, for example, hurricanes in Florida. Our houses stood up very well against them, and strong focus on keeping debt levels low. So 26% debt to capital ratio, which is lower than any of our competitors, and improving gross margins signify our strength in this category.
Overall, thank you for listening, and we hope that we were able to convince you to invest in Toll Brothers stock. Thank you.
Should we do it again?